In this video, we're going to talk about a forecast for the housing market in 2023 because it's essentially on everyone's mind. What I'm going to do is present to you a deck that was prepared by Laurence Yoon, who's the chief economist for the National Association of Realtors. He presented the deck about a month ago during a real estate summit, and I felt that the information was really well put together, some really interesting data points to wrap your head around, and I believe it's going to help you better understand what may be ahead this year and also next year. Now, before we start, do me a favor, like this video. Also, let me know, what do you think is going to happen in the housing market? Leave us a comment in the description section of this video. Really appreciate it, and let's get started. What we're looking at here is a summary of the predictions by major economists as it relates to home prices this year. We can see that some of these economists are actually predicting that home prices will increase, and some of them are predicting slight price decreases. And for the exception of Redfin, Goldman Sachs, and Moody's Analytics, who's actually predicting that prices are going to decline by over 10% this year, the majority of them are really hovering at around 0% or maybe slightly below that when it comes to home prices. And so the key takeaway here is that economists, for the most part, are not predicting that prices are going to crash. If anything, if we see price decreases, it's going to be very slight. To get our bearings, we're going to look at this first slide here that talks about annual existing home sales on a yearly basis. 2022, here's that red line. You can see 2021, it really dropped quite a bit by 16%. And we're not talking about prices here. We're talking about the number of homes that were being sold. 2022 was really close to the level of home sales in 2014. If we look at this in terms of a monthly view, the number of homes really started dropping in the beginning of 2022, and that lines up with the mortgage rate increases, right? So more people were being priced out of the market because home prices started accelerating and mortgages were getting more expensive to get. Now let's talk about new construction sales, which is about 10 to 15% of all home sales. And the story is relatively similar here. Of course, new construction sales were down in 2022 by about 17% from the year prior. This chart here is such an important chart to wrap your head around because it really is alluding to the supply and demand issue that we're facing right now. That's one of the reasons why the prices, relatively speaking, are holding pretty strong. So what you're seeing here is the number of new construction homes that are being built over time, and that's symbolized here in this orange line. The blue line is the historical average, which has been about 1 million units per year. What you'll notice is right around the recession 2008, new construction builds took a nosedive. It never really recovered up until 2021. But now what's happening is that a lot of developers are pulling back yet again because they're trying to lower their costs in anticipation of a recession this year, even if it's a mild one. And that's not helping the fundamental supply and demand issue, which is actually, even at this point, a long-term problem. U.S. median home price, and I love this chart because what this chart shows very visually is the seasonality that comes with prices during the year. Prices typically tend to be higher right around the summer months. Now, that's going to differ somewhat depending on what region you're from. I'm in Florida, and our peak prices are usually right before the summer actually starts. This chart just blows my mind because what it shows you is the Austin median home price and how it increased dramatically over just 2 years. Essentially, it doubled. And so whoever bought a home in 2020 or 2019, good for you. You did pretty well for yourself. Now, the big question everybody's asking is, are the prices going to crash this year or even next year? Because how is it possible that prices can accelerate so much over 2 years since COVID without this being a bubble? What I love about this chart is that it looks at key variables and compares the last housing cycle to this housing cycle against these key variables. And so when you look at job cuts, for example, in the last housing cycle, 8 million jobs were cut, net effect. In the current housing cycle, yes, people are being laid off in the mortgage industry or some in the tech industry, but there's also jobs being added in today's job market. And so the net effect is none. 0 job losses. Let's look at total payroll jobs. Last housing cycle, there were 130 million people. This time around, there's over 20 million more people on a W-2 salary job. Now, not everybody's going to have a salary job, and so if we look at household surveys, which basically ask people in the household if they're working or not, if they have a job, there's also 20 million more people that are actually working. What about subprime loans? I mean, back in the days, it was so easy to get a loan. This time around, it is much harder to get a mortgage because you have to prove that you can pay that back. And so subprime loans are virtually non-existent in today's market. Leading up to the housing cycle during the last recession, there were about 7.65 million cumulative new construction homes that were being built. In today's cycle, about 4.6 million. And so when we talk about supply and demand issue, a lot of this is driven because of supply being really low, demand also low, but supply also low. Prices are holding for the most part. Inventory on the market, 3.8 to 4 million in last housing cycle. This time around, just about 1 to 1.2 million, alluding to the supply issue. Mortgage delinquency, 10% in the last cycle, 3.6% this time around. Homes in foreclosure, 4.6% in the last cycle. It's almost non-existent this time around, 0.6%. And so when we compare this housing cycle to the last housing cycle against these key variables, it's very, very different this time around. And that's why most economists are saying, don't look at the last recession. This is a completely different story. This is a great chart visually because it shows you the distressed home sales as a percentage of total sales in 2022. So low when you compare it to the last 10 years where it was really high back in 2010 and prior to that. The mortgage rates, the peak was back in November of last year, but there's some hopeful signs that the peak has happened and that this year is going to stabilize at around 5.5% towards the end of the year. We're not going to be seeing any mortgage rates in the 3% range for a long time, but it should hold steady to about 5.5% towards the end of the year based on a lot of forecasts that are out there. Now, looking at unemployment rate over time, right before COVID hit, it was around 4% and then it spiked. A lot of it had to do with the lockdown, and now it is back to normal at around 4%. Here's a color-coded map of the United States. Find your state and see what color it is. If it's green, that is really good. If it's red, not so much. If it's orange, it could be better. I live in Florida. If I look at this map here, it says 6.05%, and what that indicates is that there's 6.05% more jobs right now available, payroll job additions, since March of 2020. And so we can utilize this map to get a better gauge of what the housing market is likely going to be. If it's in the green, it is likelier that this is going to be supportive also of a stronger housing market. What city is expected to outperform this year when it comes to the real estate market? Well, let's look. This is based on NAR's prediction. Number 1, you got Atlanta, Sandy Springs, Marietta, I don't know if I said that right, Raleigh, Dallas, Fort Worth, Arlington, and so forth. I actually got really excited to see Jacksonville, Florida in here because I live in Florida, and that's great. Jacksonville, go Jacksonville. The home sales forecast is in red here for this year, and it's going to slowly increase throughout the year, where the bottom seems to have been in Q4 of 2022. What about home prices? What's going to happen to prices this year when we look at it by quarter? And so in Q1, based on NAR's forecast, it's going to continue to increase slightly below 3%, but then in Q2, we're actually going to see price declines. And the reason why is because in Q2 of last year, the prices accelerated so fast and so high, and that's going to be really hard to beat. After Q2, though, it's going to turn positive again, accelerating more positive in Q4 of this year. And here's the moment we've all been waiting for, and that is NAR's prediction for this year and next year. What is it going to be? So let's refer to this chart here, which is color coded. In blue is what already happened. In green is either an estimation for 2022 or forecast for this year and next year. For 2022, it is expected that prices are going to come up about 9.6% above what they were the year prior. For this year, if we look at unit sales, yeah, it is predicted that the number of homes that are being sold, this year's going to be far less versus last year. Not so great for real estate agents, not so great for mortgage brokers. But what about you, the home buyer or home seller? NAR's predicting that home prices are going to not appreciate, they're not going to decrease either. They're actually saying plus 0%. Okay, now once this year is over, once the economy is stable, once the housing market is a little bit more stable, it should accelerate in 2024. And so they're actually saying that when we look at unit sales in 2024, so next year, it's going to be up by about 10%. Home prices should be up by about plus 5%. Now, I want to remind you that when we talk about a 0% price increase on average in the US, that's exactly that. It's just on average across the United States, but each place is going to be doing a little bit differently. California is expected to see price drops this year. Florida, on the other side, is expected to see some price increases because lots of people are going to want to move here. Job creation has been great over the last few years. It's expected that prices actually increase on average 5% across Florida, but even that is going to differ depending on what city you live in. And so it's so important that you work with a local realtor to get a really good understanding of what the market trends are there. Some places are going to be up, some places are going to be down. Get local information. Thank you for watching, guys. If you haven't liked the video yet, please do so. Really appreciate it. Now, I'm a real estate agent here in Sarasota County, Venice, Bradenton, and Lakewood Ranch. If you are looking to buy or sell in this area, I would love to help you. Call, email me anytime. Thank you so much for watching, especially until the very end. I always appreciate it when you guys do. Take care.